Hey, let's open up the first Payne's investment playbook for you guys. Now, of course, we talk a lot, and I've talked about how this rally is justified in my mind because I've given a lot of the credit to the global middle class. Listen, it's been big. It's over 1 billion people, and I think I've been right on that. But one thing I'm starting to see right now is a shift, and I think it should be reflected in your portfolio. Now, when I say at the beginning of the show that we look under the hood for trends to make you money, this is what I mean. One of my favorite companies posted disappointing earnings this morning, but lost in the headlines and cautious comments from management are signs that American demand is rebounding while the rest of the world is slowing. I'm talking about Whirlpool. We closed it. The stock came back a little bit, but look at North America, up 8.8%. Latin America, where all the growth was, down 36%. And Asia, mostly China, which was supposed to be a juggernaut, off 71%. Now, although there are signs that the second half of the year could be huge for the American economy, individual investors sold almost $10 billion worth of mutual funds just recently, okay, and they've been plowing that money into the rest of the world. I think that's kind of nutty here. In fact, though, it's an interesting trend because year-to-date investors, after initially investing in both the world and America as we came out the gate, they started to change their minds, and they started to sell American mutual funds and buy more and more foreign funds. As a result, we've sold $6 billion net of domestic funds while we purchased $60 billion in funds that represent the rest of the world. I think that's a huge mistake. All right, guys, let's talk about this. Takes us to our next real deal. Although I've been pounding the table all the time, everyone who knows me, I'm always talking about the world and the platform and the global growth. And for the most part, I've been focused on U.S. companies as proxies. Any company with tentacles has been a good way to play it. Now I think, though, that companies with a domestic focus like rails, buildings, these things should be in people's portfolios. Dani, what's your assessment of the global economy, and how is your portfolio broken down with respect to geographic?
Sure, that's a great question. I do agree with some of the things that you're saying, Charles, particularly because we're seeing some lagging in places like China and the EU. The consumer spend just isn't there. But in America, we are seeing that consumer spend start to wave its head. So I do agree that America, especially with the bigger companies, not the multinationals, is where to play it.
But isn't that so weird, though? Like, guys, that all of a sudden, people just started dumping. I mean, every single week, you look at ICI data, every single week, we're dumping stocks dedicated to American companies, and we're loading up in foreign companies.
They want risk, right? I mean, if the risk-on trade is on with the market hitting highs, they see the emerging markets as a little bit riskier. Even Western Europe is a bit riskier of what happened in Europe. So I think that's the risk-on trade that's taking effect.
So you're saying these guys want the big risk?
Yeah, the big reward. There's higher upside, in my opinion, to the developing markets and to Western Europe than there is to the United States. But at the same time,
do you
there's
have
much
a
more risk.
geographic breakdown in your portfolio right now?
I'd say we're probably 20% in Asia, emerging markets, about 20% in Europe, and then the remainder here in the U.S.
But there are companies that people still like here. I mean, to Dani's point, the consumer is spending. I mean, a company like Michael Kors, it's based here in New York, and not in New York, but in the United States. Revenue's coming in at $3.1 billion. They separate their business from retail, wholesale, and licensing, and most of it's done here.
Although I think, ironically, I'm in Michael Kors, and I think it might be those European sales that save them.
They do come here and buy
US
here.
Same-store sales have been sort of drifting.
But I think we've been talking about the Russell here, too, all along. The Russell's really been holding on, and that's a perfect representation of small cap America and what's going on here. And it's moving. It's holding on pretty strong.
So if you're looking for a company with these global tentacles, what would be something that would help you make your decision?
Well, Caterpillar to me is like probably the perfect one of the perfect proxies. I think that's always been one that's worked out pretty well. Whirlpool, the reason I use that is because Latin American growth and Asian growth has been what's made the difference. And this quarter could have been a hiccup, maybe not, but I do find it interesting that Americans aren't invested in America. All my patriotic friends who stop me on the street all the time and tell me they're so afraid of the rest of the world. What do you got?
Yeah, well.
Eagle Materials is a stock that I own, had earnings last night after the bell. They're cement and gypsum. Eagle Materials, EXP. They came out record first quarter revenue, record cement sales.
That was the day they just came out?
They came out last night after the bell. Stock was up 5% today. But that's an example of investing here. 40 facilities in the United States. And if you believe that the housing is going to continue like you believe, that's a good way to play it.
All right, guys, thanks a lot.